All right, let's start off by just saying it like it is. We got our asses kicked last week, right? That is a pleasant way to say it. Kevin, once again, coming to you with Weeds Weekly Wrap. We're going to cover this past week really quickly. We're going to talk about the week ahead. I'm going to give some thoughts, and I'm also going to talk about the fear of the unknown. That's going to kind of be the big topic. All right, this past week, look, we went from slow. We kind of started off a little bit like creeping along to fast, right? It seemed like, oh my Lord, brakes. Where is this going to go? To, oh shit, things just kept compounding. Things got worse. And obviously it was all inflationary driven. Both CPI and PPI came out higher than expectations, and it literally felt like we were on fire. And I say that not because we haven't experienced it before, but we haven't experienced it in 2024. So it was unique to kind of get back to that place where we were really on the defensive. We haven't seen that in a while. You know, since September and October of last year, it's been kind of a steady decline. We had a rapid decline, but we had the holidays that were kind of masked in there. In 2024, it seems that we've had a lot of optimism. So it was really tough this past week because I believe it set us back a little bit. I'm going to talk a little bit about that here in the next few minutes, but you know, it felt like we had a lot of momentum headed in our favor, and it just got all derailed this past week. So the one thing that did come out that I thought was a positive is we are finally seeing, and you hate to say it, is there is a kink in the armor of the consumer. For all of 2023, traders, experts, economists all anticipated that because of high inflation, consumer prices, consumer services, that the consumer was going to crack. They were resilient, and that kept rates very high. As a matter of fact, it was one of the main culprits for the 8% interest rates that we saw in September and October. But we're starting to see a crack. Consumer spending was down. And look, the long-term effect of that, not only does it have a very good short-term effect, but the long-term effect is also a positive. And it's a positive because what that does is it's going to, in the long run, curb inflation, right? The consumer spends money. If they are spending less, it's going to drive down those consumer prices. And obviously then inflation is going to come down, which is a great thing, which means rates will come down. So the other thing that we have now coming up this week is we have the Fed coming out to speak, as well as we have the FOMC minutes. So we have the Fed minutes coming out from their meeting 2-3 weeks ago. And I think we're going to get a lot of the same rhetoric. The one caveat that we have now is those big inflationary numbers last week, which the Fed has clearly been indicating that they believe that their policies are being effective. Whoops. That was a mistake. So I think what they're going to say is a lot of what they've said in the past, but we haven't really heard it a lot lately. But if you recall, a lot of 2023 from the Fed, it was, we need consecutive months of data for us to consider doing anything. I think a lot of their rhetoric is going to be that, hey, CPI this week and PPI are kind of just a bump in the road. Let's not get all concerned. We're going to look at it as, hey, it's just a one-off, so to speak, and we're going to want to see what's going on coming out in the future. The problem with that, right, is now it pushes out when the Fed could potentially lower the Fed funds rate. You know, if any of you were tuning in, and I'm sure a lot of you were or whatever, or you caught the episode, my prediction was back in November, the Fed is not going to do the first rate cut until July. And I think we're going to land perfectly on that. However, it's perception, right? It's perception of the consumer. It's perception of the traders who don't now want to jump into the 10-year treasury market. They want to sit on the sidelines. They want to be in a selling posture. They want to be conservative because they really now don't know. It's now been kicked further down the line. I mean, obviously, the Fed had already talked about taking the March rate cut off the table. Now, I believe that we can even kick that down to the July timeframe that we were thinking. And that is if data comes out in March and is a little bit more on the positive side. So, you know, the U.S. economy has its work cut out for it right now. And I think that's something that we also have to understand, is that the U.S. economy is trying to figure out, hey, you know, we got jobs, we're adding, wages are going up, but it's not outpacing inflation. Fed is telling us inflation is coming down. Jobs now, we're seeing a lot of cuts across the board, but the jobs numbers have been good. But the Bureau of Labor Statistics, the BLS, they changed the number a little bit. So I think the numbers last month look a little bit better than they should. So there is a lot going on. And the biggest thing to understand, I think, as we talked about before as well as, and we had anticipated this, that Q1 was going to be rocky, and it's going to really dictate what the rest of the year is going to look like. So we're about halfway through. So expect a lot more volatility. And once we get to the end of March, I think we're going to have a good idea of what is going to go on, right? So I think that's the biggest thing. The other thing that we found out this past week is there is a new floor, right? We talked about it last week. We were kind of hovering between a floor of 4% and a ceiling of 4.2. Well, because of the inflationary numbers this past week, the floor now is about 4.2. So we basically have jumped. The floor now is 4.2 and the ceiling is 4.3. So what I expect really for the next several weeks, well, not even several weeks, it's probably next week, and then the beginning part of the other one, we're going to do this a lot of side to side. We're going to get up and down because, again, all data matters, but the big numbers really matter. And I think what's going to happen is a little side to side movement. We're going to be hanging out in the high sixes now for people with good credit to, you know, you're in the 7% range if you have poor credit. That's just the reality of where we're at right now. It sucks, trust me. No one wanted to be moving in this direction, but it is what it is. But the biggest thing I wanted to talk about is what it's created is really the fear of the unknown, right? And what do I mean by that is, you know, when we feel fear is often used, I think, in politics. Fear is often used to try to motivate people. But often what it does, when you have fear, it almost feels like you're in quicksand. You can't move, right? You don't think right. You push things off. You become paralyzed, for lack of a better word. And right now, I think that's what it is. It's the fear of the unknown, because perception is reality. Look, interest rates probably went up about a quarter point. And for every $100,000 that you borrow, that's $16. It's not a lot of money, okay? So in the grand scheme of things, if you got a $500,000 loan, you're talking less than $100 a month that the payment changed this past week. But again, it's perception, right? You see it all over the newspapers. What does it mean to interest rates? When are they going to come down? When is the Fed going to cut? I mean, should I wait? Because I think I want a lower interest rate. And now I'm also hearing like, well, does that mean that as we come into spring now, you know, more sellers are going to be out there? Is that going to push home prices down? Should I wait? Right? We're getting these questions constantly from our clients. They are hounding us with that. So, you know, for me, the bigger picture of what's going on right now with the fear of the unknown is, number one, is the timeline for the Fed just got pushed back. We have been talking about it. We assumed July. We knew it was going to be volatile. We knew it was going to be rocky, but the consumer doesn't, right? So again, perception is reality. So it's our job to talk about when exactly that's going to happen and why now is the best time to buy for reasons that, hey, July is when we can expect it to decrease, but this is the reason today it's the best time to buy. And the other thing that I'm more concerned about is the following, and this is my biggest concern of what happened this past week, is that spring buying season is right around the corner. And if we get data, and primarily in the beginning of March, if we get a jobs report as well as a CPI report that are not in line with forecasts or below or where they need to be to show inflation is coming down and jobs are coming down, so lower than forecasts, if they beat it even by a little bit, we have a problem. Because now, to me, the spring buying season is kind of on thin ice, right? Again, perception is reality. People are in quicksand. They feel paralyzed a little bit. They're excited. Weather's changing, so I hope that offsets it. But I'm telling you that within the next 2 to 3 weeks, we need our fingers crossed, because right now that spring season is on thin ice. Because if those numbers don't come in to where we need to, we're going to see rates up into the 7% range for people even with great credit. And that is absolutely something we do not want to see. So let's just keep a quick eye. And then lastly, I can't stress it enough, and I've said it to a couple agents that I've spoken to this week, make sure that your client is directly in touch with their mortgage lender sooner rather than later. As we just saw this past week, rates change so quickly. They change rapidly, right? A quarter point can be hey, this person wants to close. Yeah, they were thinking about buying that house, to now they don't want to buy it all. They want to sit on the sidelines. Whereas if they were talking to that mortgage professional sooner rather than later, they can be talking to them about it's $16 a month for every $100,000. Really putting their mind at ease, as opposed to hearing it in the media and then getting paralyzed and feeling like they're in quicksand because now they have fear, right? All right, everyone have a great week. Don't mean to be the doom and gloom guy, but hey, we got our asses kicked last week. So we got to regroup ourselves a little bit. We got to cross our fingers. We got to say a couple prayers. We got to hope that the Easter Bunny now is going to save us. And we got to get those numbers coming in our direction as we head into March. All right, everyone have a great week. Happy selling out there. I'm always around. You need anything. As you can see, I'm cutting this late at night. I just got off the phone with a couple clients. Don't mind taking anyone's call at any time. Actually, pulled over on the side of the road today to speak to a real estate agent while I was on a bike ride. So, hey, no time is a bad time. Give me a call if you need anything. Have a great week. Happy selling. Peace.